A terrible Thursday for equity markets, and mind you, this is not how we anticipate a trade to be. When we walked into trade this Thursday morning, it was at best just a very quiet start that the global cues were pointing towards. In fact, the pre-open rates held out by about 0.4%, and there was much enthusiasm around Infosys, which the markets would be reacting to first thing today morning, given the 6% jump that you had on the ADR overnight. But that's not exactly how things panned out. Quite a start it was. We did inch up higher, only to close in at the lows of the day. It's a vicious 300-point fall that the Nifty has seen today, and we've even breached that 11,700 mark for ourselves. Let me not even talk about the market breadth, because it was as dismal as just 7 names standing to the advances, the biggest of them being Petronet LNG and MGL, so not much of a fundamental trigger really backing these names. But that aside, you'd have to say that the temperament of the market fall was also very much global in nature. The excruciating sell-off only transpired in the latter part of trade today, as countries like Poland, Croatia did confirm that a second wave of the virus had hit them. You also had London, which is curbing socializing. They also talked about restricting high various areas as well. So clearly, that seemed to have spooked the markets. After that, there were diminished hopes of a U.S. stimulus actually coming in with the back and forth which is happening in the U.S. government. That really tumbled the markets all the way to 11,675. The sectors which actually were responsible for today's fall were also, unfortunately, global in nature. IT and banks, and they were the resting pins of the fall that you've seen in the markets today. Having said that, all sectors have actually bled. There's been nothing in the green, but just look at the kind of cuts that you've seen for a Bajaj Finance, for a Bajaj Finserv, for an ICICI Bank, for telcos. Infosys, after having delivered a great set of numbers, actually closed in the red by about almost 3%. And to say the ADR jumped up 6% overnight. Not just that, you also had the likes of autos, metals. It was just all a sea of red. And that was similar state across the broader markets as well, wherein autos, mid-cap IT, as well as financials really took the maximum bear or brunt of the beating. So that was really the texture of the market today. You really have to see where this global sell-off is going to stall for itself. For a market which was already very brittle, we've seen the kind of chop and churn that has happened for the markets this week, starting off Monday. In any case, we just needed that little bit of a push for us to fall further, and that has actually come in the shape of the global cues this afternoon. So one really has to see what happens to the Dow futures, whether they fall further, and whether or not US markets actually take cues from what's happening across the Indian as well as the European market screen today.